In this video, we're going to do a bit of a deep dive on where the smart money buy and sell levels are. For example, in the S&P 500, if there are smart money sell levels here, we would expect the S&P 500 to sell down. If the S&P 500 is on a confluence of smart money buy levels, we expect the S&P 500 to rally up. You must know where smart money is buying and selling. We're going to look at a lot of charts and you're going to learn heaps. The main market in the past trading session went just about nowhere. All sectors down 0.11%. Energy did the best, up 1.56%. IT did the worst, down 0.88%. We can see Nvidia and TSM and the semiconductor sector not doing too well. The drug manufacturers, on the other hand, are doing very nicely. The probability that interest rates will increase at the next FOMC meeting is currently 11.5%. This is up from 11% 1 day ago, but down from 22.3% 1 month ago. In the latest news, the US Producer Price Inflation Index actually picked up for services, and that's something that we noted in yesterday's video would not be such a good thing. The PPI month-on-month, or the Producer Price Index, indicates how much inflation is getting into goods and services, and the actual was 0.3%, the forecast 0.2%, and previously it was 0%. The threat of inflation drives yields up and the DXY, the US dollar currency index, up as well. When the DXY comes up, the euro dollar goes down. There was a slight moderation in terms of risk-on appetite as far as junk bonds concerned, and also the VIX spiked up initially and then came down. Increasing yields and an increasing dollar is not good news for gold, and we saw gold continue on its descent. We also noted that oil did a slight retracement. Technology has been hit hard just recently. We've seen big decreases in Apple, and when we look at the Nasdaq, we can see the Nasdaq is under a degree of weakness. But we look at CTKS structure formed through objective dynamic market structure. We don't focus just on recent indicative price because that can RIP your money. For example, when we zoom in on the Nasdaq, is the Nasdaq just under a ton of resistance and about to sell down wildly? Or do we have strong structural support so the Nasdaq can do a bounce? To answer this question, we mark up the chart with the CTKS method, and this is done since 1973. Let's pop on the indicator and see what we can see. We can see that actually there's a strong amount of smart money buy support around this 13622 area. In other words, the buyers are stepping in and short-circuiting the sellers. We're always looking for safety nets inside the market, especially when markets tend to tank downwards. For those new to the channel, a very warm welcome, and these particular lines are called SLs, or Stanfield levels. You see that just up here. A Stanfield level is a very, very different level to normal support and resistance levels. Normal support and resistance levels are drawn with SBA and RIP, that is, story-based analysis and recent indicative price. They're drawn very, very subjectively. SLs are drawn objectively through a standardized process called the CTKS method. You can learn to do it yourself. Another Tier 1 chart is the S&P 500, and here we've marked up the S&P 500 since 1871. This is not recent indicative price. When we throw the smart money buy and sell indicator on, and this is to detect where smart money is buying and selling, we can see that the buyers are down approximately around that 44.39 area and below. The more clusters of smart money buy areas that we get, the stronger is support. Strong support creates positive air. Positive air is where the price doesn't even get down to these levels, and we can see increasing amounts of positive air inside the S&P 500 structure. Therefore, when we look at the Nasdaq like this, with story-based analysis and recent indicative price, we might say, wow, the Nasdaq is looking pretty weak. Things could sell off wildly from here. Not really so when we look at market structure. When we look at Microsoft, we have to answer the question, is Microsoft under a ton of smart money sell resistance, or is it at actual smart money buy support, or somewhere in between? If we don't know the answers to these questions, we're just guessing on where price could go. So let's throw on our X-ray vision through the CTKS method. And if you would like this indicator, just pop across to ctksmethod.org. We can see there's a smart money buy level at 321.59. And what's happened is that Microsoft came down and tested this safety net. These safety nets are gravitationally biased. That means the price tends to get pulled up and down because of it. What you need to understand is how the Nasdaq, the S&P 500, and the other particular components of those indices, how they actually relate to one another in terms of structural support or structural resistance. We know that the Nasdaq is coming into structural support. We would expect a technical bounce up for Microsoft, which closed at 321.20. The next possible smart money sell level above is 329.08, and we can see there's a level of smart money buy interest below around that 316 mark. Knowing where to find smart money is a very elusive thing, but with the CTKS method, you'll see it instantly. There is a very big difference between retail and professional. Professional make sure that they have all the data that they need. When you're looking at the CTKS method, it's a lot like a technician looking at an EEG. To the general population or non-medical professionals, something like this may not make a lot of sense. But for an EEG practitioner or for a specialist or a doctor, it makes a lot of sense. They know exactly what it means. When looking at the CTKS method, think about yourself as a trained medical professional looking at an EEG. You can think that an EEG represents brain health. The CTKS method actually represents the chart's health. I'll explain a little more using a very practical example. When we look at Apple, it's marked up with the CTKS method since 1980. You can see that there's a very big sell down. When you get big sell downs, retail think the price is going to zero. Of course, they panic. If only people knew the EEG of the chart. That would be fantastic. They'd know where the safety nets are. But if they don't know CTKS structure, they don't know where the smart money is buying and selling. So let's pop on the indicator, and you can get this indicator by just popping across to ctksmethod.org. What we see, like an EEG, is there are different levels. These are smart money buy levels. When the price is coming down, this is a smart money sell level when the price is below it. You can see they ping pong, come up, retest. There's another smart money buy level and another one down below. You can note how price gets caught and then tries to retest but resumes down. This is a very strong one. There was such negative momentum inside Apple, but as you get greater and greater confluences of smart money buy levels, they capture price, they slow its descent, and even reverse it. Price is always moving SL to SL, and you can see price is always also moving in a wave. It's trying to retest, trying to get above. It can't get above, it's going below. This is a very, very easy way to understand the CTKS method. We've seen the fact that Apple has been weakening, although it's been caught by a raft of smart money buy areas. These buy areas are gravitational. We can't just look at Apple and say, I know where Apple's going. You must look at the Nasdaq and you must look at the S&P 500 as well. We know that the Nasdaq is coming into smart money buy support, and Apple is a major, major stock. Its percentage component of ETFs is just out of this world. What does that actually mean? Market makers do not want Apple to fall. They want to bounce it up through this smart money area and get it and turn it to support. It's looking a little bit weak now, but because we know where the Nasdaq is going, we know that Apple can bounce from here. And if it's very weak, it just comes down to the next SL, which is below here. One thing, when we look at gold, and we look at its market structure, it's ping-ponging between different levels. We can draw recent indicative price, but you can be pretty assured it doesn't go back to 1833, but our indicator does. When we throw on the smart money levels on gold, what do we see? Price moving between SL and SL. If it can't get above, it's going below. If you get positive air, it has the potential to push up. And we can see that smart money level at 1919. Just imagine if you didn't know the level, you wouldn't know there are sellers up there trying to push the price of gold down. And if you didn't know this smart money support level, you wouldn't know that there are buyers there around the 1910 trying to push price up. And if you would like this gold indicator, you can just pop across to ctksmethod.org. You can see there's a very big difference between looking at price structure with the method indicator off and then with it on. It actually tells you what's going on. It gives you the health of the chart. The Euro USD or the Euro dollar was released into the service just 24 hours ago, and here it's marked up since 1971. When we throw the smart money levels on, they're going to tell us a story. They're going to give us the EEG of the chart. Now, when we do so, and the euro has been marked up since 1971, this very strong smart money sell level, notice how price hasn't even got an opportunity to get up there. If you were trading FOREX without the indicator, it's very, very difficult to know where smart money is buying and selling. But you don't need the indicator, you just need to learn the method and you can mark the chart up yourself. What a powerful situation that is. What we saw before this sell-off in the euro, we saw that the euro just couldn't muster the strength to get above this SL at 110.05. What does that mean? If it can't get above, it's going below, and it really got below this one. If it can't get above, it's going below. Hence, when you have the understanding of structure, it's an absolute game changer, and it applies to every single chart. Commodities, Forex, crypto, stocks, indices, futures, options, everything. To know where smart money is buying and selling is incredibly important. Getting that X-ray vision is vital. And here silver is marked up since 1802. Wow, that's quite a long time with the indicator. So let's throw on the indicator and see what's happening. Is silver coming into an area of smart money resistance and about to be pushed down? Or is silver actually having a lot of smart money support underneath it? Let's check it out. What we can see, silver closed at 22,689. And we can see that at 22.62, there's a very nice smart money buy level. But there was a smart money sell level up here at 22.82. What did it do? It hit this smart money sell level, couldn't go higher. Where was it coming back to? You got it. 22.62. And what do we see right now? There's a lot of strength here. There's positive air. There's positive potential inside silver to come back to this 22.82 mark. Without the CTKS method, you couldn't see these facts playing out inside the charts. And don't forget, these levels are from 1802. It's very important as a trader or investor to understand what the crypto market is doing. Crypto is incredibly risk sensitive. It can give you insight into the main markets. And a good piece of news, Sam Bankman was sent to jail. About time. Scammers exist in every single market, in every single sector of the economy. Scammers are simply people who say, I want what you have. That is terrible. SBF or Sam Bankman freed. And he's not so freed now, Sam Bankman jailed. came from a good family, an influential family, but unfortunately that influence was not used for good. It was used to defraud people. The judge sent SBF to jail for witness tampering, or at least attempted witness tampering. In other crypto news, Cathie Wood's ARK21 shares Bitcoin ETF application decision was pushed out by the SEC. Shock horror. Gary Gensler, or more the point, Gary you can never gain, slur, is the Darth Vader to the crypto universe. In other news, CryptoQuant has confirmed that Tether is the 11th largest Bitcoin holder using on-chain data. SHIB is currently pumping because the Shibarium deployment is ahead. Crypto is a real threat to existing industries, especially the banking sector. A lot of arguments have been thrown at crypto. For one, what do they say? Well, it's being used by scammers and fraudsters. No, that's the purpose of the US dollar. In fact, the percentage of fraudulent transactions inside crypto is very, very small compared to the fraud associated with the US dollar. The other thing that people look at, they say, crypto is just so energy intensive. If you look at the stats for the banking sector, you would be blown away. In the masterclass, we do deep dives on this. What you're told and what the facts are often incredibly different from each other. And what about this? Bitcoin mining uses 63% renewable energy. It's one of the cleanest and greenest uses of power that there is. The interesting thing is when it comes to crypto, the institutions are very, very interested. Institutional investment brings new momentum to crypto. Institutional adoption is being driven by expanding crypto derivatives market. The big end of town always hops on a new thing because they know it has potential, and Bitcoin and crypto is the future. In other crypto news, Binance invests $5 million in Curve Deo or CRV to support the protocol. In other signs of institutional adoption, payment giant Visa tests a way to make paying Ethereum gas fees easier. Wow, fantastic. They're too expensive. Vitalik! And shock horror, Visa has completed the testing for a process that would allow users to pay the on-chain gas fees in fiat currency with their credit card. Thanks, Visa. Whilst the chairman of the SEC, Gary You're Never Going to Gain, Gensler, tries to push down crypto adoption, the East is thinking otherwise. Hong Kong securities regulator issues in-principle approval for HK-VAX. The announcement comes after Hong Kong debuted crypto retail trading with exchanges Hashkey and OSL. The world's largest crypto exchange, Binance, is applying for anti-money laundering compliance in Taiwan. It wants to register in Taiwan. I suggest keeping your eye on Aptos. Microsoft and Aptos have teamed up to combine the powers of AI, artificial intelligence, and Web3. The crypto market and the stock market tend to move together. In fact, we have a rule. It's Rule 225. Bitcoin cannot escape the stock market's gravity. The main market was just a little bit flat and slightly negative. And what are we seeing here? Exactly the same thing. To understand where the crypto market is headed, it's vitally important to understand not only Bitcoin's gravity, but Bitcoin's structural levels. How do we do this? We just pop on the CTKS method indicator. Now, what does it tell us? Bitcoin has support around that 29,260 level. These are smart money buy levels, and there's a couple of them in there. We can see that we came down and tested those and were immediately rejected back. What does that mean? The buyers stepped in to support price. We can also see that a smart money sell level exists at 29,560. We also saw that the sellers are squashing price down. We've got a definite battle between the buyers and the sellers. But as I noted yesterday in yesterday's video, this particular push up here is kind of like, hey, Bitcoin, you shall not pass. It's time for you to consolidate and then explode upwards. Bitcoin is currently 29,395, but we know we can't just look at Bitcoin, just like we can't just look at Apple chart. If we want to trade Apple, we need to look at the Nasdaq, and if we're going to look at the Nasdaq, we need to look at the S&P 500, and if we're going to do that, well, we should look at the DXY and gold and yields and all those fantastic charts that will cross-triangulate each other. Therefore, in the crypto land, what do we need to look at? You got it. We need to look at total. Looking at total crypto market cap, and this is marked up since 2014 inside the indicator. But let's just talk a little bit about this particular chart. This looks pretty weak. I mean, there's no other way that you can say it. It looks weak. And a lot of people would say, okay, there's a massive sell-off coming, but CTKS structure overrides. What does this mean? When we pop on our indicator, we can see that there's a smart money buy area, and it's quite a strong one at that $1.127 trillion mark. In fact, price came down to try to pierce it, didn't even get close. We can also see that up around this $1.153 trillion mark, there was a lot of overhead resistance. If you can't get through one, where are you going? Down to the next one. And if we can't come up, of course, we're going to go down further. But if we can come up, we're heading towards 1.153 trillion. And it may be a little bit hard to see on your screen, but there's a smart money sell level, and it's quite a light one, but it's still there at 1.145 trillion. And note how the price came up of the total crypto market to this level and said, thou shall not pass, and it came down. So you must be aware of smart money buying and selling levels. It is literally a game changer. When looking across crypto, we can see in terms of the greatest gainers and greatest losers, ADA is down the most, but pretty much the crypto market has not moved. Let's look at the top 24-hour percent gainers, top 100. They are Rune, SHIB, Fracshare, Ton, BAT, Woo, Ape, and Bone. Looking at the greatest losers, top 100 past 24 hours, XDC, GMX, Rocket Pool, OKB, HBAR, sounds like a good place to grab a drink, Curve, Aave, and Link. And we know some news about Binance stepping in to support Curve. Looking at the relativities across the top 8 cryptos, we can note that Bitcoin's gravity was quite negative. And when we look at Bitcoin compared to Ethereum, Ethereum is actually doing better in relative terms. It's not down 1.77% from the time that this particular chart was drawn. It's only down 0.74%. Go ETH. And what about Binance Coin? It's down just a little bit less than Bitcoin. What about XRP? It's a little bit weaker, down nearly 4%. Doge is a very interesting crypto animal. It tends to get really, really angry when Bitcoin sells down. It says, blast you, Bitcoin, I'm going to go up first. So keep your eye on Doge. If you found other relationships like that, please let me know. As well, when Bitcoin starts to rock and roll, we've seen XRP and ADA do incredibly well. They basically outperform, so keep your eyes on these two. And we can see ADA still coming down. What about Solana? Solana by nature is very spiky. It's a really good token to trade. And Tron, look at that, shining in the darkness. Often Tron comes up when Bitcoin is going down, so you can see all the cryptos have their own personalities. If you've got a personality you would like to share with a crypto, please let us know in the comments. It's always good to grow as a global family. Turning to the EDX exchange, and what is the EDX exchange? Gary, you shall not gain, Gensler, says, hey, guess what guys, these ones are okay. The institutions can trade this, and therefore, so can you. These are, of course, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. We noted previously that Bitcoin Cash has just outperformed the market. Now it's coming back into alignment with the market. What the institutions can do, and unfortunately they do it all too often, is they can send prices soaring, and that gets people really, really interested because retail buys on green. The institutions buy on red. When the market goes green, especially double-digit green, a lot of retail investors and traders just pile their money into whatever is going green or green-est. Unfortunately, you need to be a little bit careful because this is the time that institutions, the large players, the whales, tend to sell. And when they throw so much volume inside the market, it tends to come down. For example, we're just looking on a 1 hour basis, but we can see Bitcoin Cash was up nearly, just over 182%. What happened then? It just came down and down and down. As retail loses confidence, the institutions are accumulating. They know how the psychology works inside financial markets. People new to the market, they buy on green because, after all, that traffic light says go on green and stop on red. When it comes to CTKS technical analysis, we don't get sucked in. We know exactly what the institutional investors and traders are doing. They're buying on red and selling on green. And we know retail buys on green and sells on red. So we don't do what retail does. Also, professionals always understand the market structure or CTKS structure. They get the market pulse. They look through a lot of different charts. What does retail do? They only look at a few charts, those ones that they're investing and trading in, and they will see that particular chart and think that chart that they're putting money into can tell them the whole story by just looking at that chart. This has never been the case. By being a member of our community, you are in fact smart money, and that's all we talk about here. Smart money concepts, smart money rules. One of the most powerful rules that you'll ever get. Look at the Tier 1 charts. All the Tier 1 charts have been released into the service, and there are also foundation memberships for the service, but they're strictly limited. When you look at the Tier 1 charts, they will tell you the health. They're kind of like that EEG that I was referring to earlier. For example, a Tier 2 chart is Apple. A Tier 1 chart is the NASDAQ. The NASDAQ will actually control where Apple can go. This really surprises people because people say, oh no, I've been taught. You've got to question that. Taught by who? They say I've been taught to just only look at Apple because Apple's chart will tell me everything. This has never been the case. Looking at the Tier 1 charts will be a game changer, and especially looking at the CTKS structure, that's what you need. As professionals, we're prepared for the down, the neutral, and the up case. Because we apply our CTKS code, we know that synchronization pays. We don't get caught inside Zone 1 and Zone 2. We get caught inside Zone 3 and Zone 4, especially in our understanding of percentages, as well as rules. We know that a little bit of knowledge is a dangerous thing. We can paint ourselves into a corner and we can lose our own support. We don't care about being right or wrong. We only care about being synchronized. And if we're not synchronized, we just pay the market and we learn a valuable lesson. We make sure that we have our foundations. We understand the intercorrelation between different charts. We know how to find the market's focus and enhance our pattern recognition. But before we buy or sell, we must master emotional control, because success inside financial markets is not just knowledge, it is also the application of courage. After all, when do you buy? You buy on red. In episode 980, I did a public masterclass, and this will also form the foundation of LV31 for masterclass students. This particular video gives you an understanding of the kind of concepts that we talk about inside the masterclass. It's pretty heavyweight, and it will give you an edge inside financial markets you will not find anywhere else. I would like to thank Let Me Know Barry for his very kind generosity in offering a CTKS partial masterclass scholarship. If you watch that previous episode, that is episode 980, this one here, you'll gain a comprehension that you're probably just scratching the surface of financial markets. I've been inside financial markets for nearly 40 years. The masterclass is all about knowledge transfer. Perperatum has also very kindly offered a CTKS partial masterclass scholarship. You can find the link in the description of this video to apply. If you're interested, please do an application. These will be closing soon. The Masterclass Scholarship puts the Masterclass within reach of any person who is dedicated and committed. And if you come across to cryptotechnicalanalysis.org, you can read all about the Masterclass, but you might like to look at the testimonials section first and just understand why the Masterclass was actually put together in the first place. Also, you'll find that there's a lot of references here, a lot of testimonials. You can just read through these and get a comprehension and understanding as to how people have found the Masterclass. You can see there's quite a few things in here that you can read. Frederick, a Masterclass graduate, puts it together really well. It's like building a house. And it's not just about making money, it's also about becoming the best version of yourself that you can be. And that really matters, because you need to enjoy life. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.